Well, we were expecting a horrible reading on Eurozone GDP today after the data from Italy last week, and Europe didn't disappoint. Paul Hannon is here to talk to me about it. Paul, how bad was the data?
Well, it was bad, the kind of bad that we're accustomed to when we're looking at Eurozone data. It was slightly below an already very unambitious target or expectation. And that's really the sort of pattern with the Eurozone economy over recent years, that it's been a little bit above the zero line, a little bit below the zero line, no great sort of collapse, no great advance forward. To take the big picture and look back at what's really happened over the last decade or so, the economy is still 2.4% smaller than it was prior to the financial crisis, and no prospect of growth being strong enough to generate the jobs needed to employ a very large number of people without work, about 18 million, or bring down very, very high levels of debt.
Is this muddling through 2.0? Is this a new version of just
It's the kind of muddling through that you get when you've really become weary of muddling through. It's the muddling through of muddling through. It's almost like the corpse is sort of still, well, not quite a corpse, there's still a little bit of life being shown there, but not enough to make anybody really happy or feel like we have much to look forward to.
Where were the positive and negative surprises? I mean, Portugal and Germany spring to mind. Portugal did okay.
Portugal did okay, so Iberia positive. It looks like the Eurozone's plan for getting these places back to growth via exports through increased competitiveness, keeping wage growth very low. Looks like that might actually be working. Central and Eastern Europe, not all in the Eurozone, some outside of the Eurozone, actually did quite well and may ease some fears about how bad the impact will be from Russia-Ukraine.
Yeah. Hungary had a great run.
Hungary is proving almost single-handedly that if you don't listen to the European Commission, your prospects will improve quite significantly. But Germany, that was a big disappointment.
Yeah, that was a doozy. I mean, what was the number there, and how much did that disappoint?
It was a contraction of 0.2%. I think the German government had managed expectations over the last few weeks, so people didn't exactly expect a big surge in growth or anything like that. So it was still a little bit disappointing, but there are mitigating factors. The construction sector did a lot more in the first quarter than it normally would have because the weather was mild. And German workers took a lot more holidays in the second quarter than they usually would have. They were bridging from a Thursday through a long weekend kind of thing. But really that's grasping at straws in a way.
You can't dress this up. It's not a good number.
No.
The question is this horrible enough to force the ECB's hand into more action?
I don't believe on balance that it is. I think they've already downgraded their growth forecast. I think going into September they'll have to do that again. But they're only moving it a little bit away. It was going to be not very impressive, and now it's going to be very unimpressive, right? But it's not a complete collapse.
Yeah.
And I think the policymakers at the ECB have hopes for the banking sector. They kind of believe that their new targeted loans will get credit flowing to businesses, and that once we're through this stress test period and all of that kind of thing, that banks themselves will, even without prodding, start being a little bit more open and willing to lend.
So we need to get the funding going from September, and we need to get the banking review sorted by November, and then perhaps we can start looking at it again.
Yeah, I mean, if we're still here come the second quarter of next year, everything has basically failed to work.
Yeah.
And I don't think anyone out there will be unconvinced of the need for a fundamental rethink, strategy-wise.
Yeah.
But right now, I think they'll probably stick with what they have.
Okay, Paul, thanks for sharing your insight.